So we have learned now about impulsive and corrective waves, and I hope you practiced your new knowledge a little bit to analyze your trending phases a little bit. And now the next concept that we will take a look at is called swing points. And swing points are the ending and the beginning phases of your corrective and impulsive waves. So for example, here on the left hand side, you can see we are in this downtrend. And at the end of each impulsive wave to the downside, we have here a point. Let's just quickly use another color so that we don't get confused here. And in technical analysis, we call those points here at the bottom, they're called swing lows. And conversely, the points here at the top, then at the end of a corrective wave, is then called a swing high. So you can see how swing highs and swing lows make up your charts and make up your trending phases. So you can see here, we can often here pretty nicely describe a trend with our trending waves and also with our swing points. And later on, especially when we take a look at our different patterns and when we look at head and shoulders, wedges, when we look at double tops and triple tops, how we time our entries, then this is a very important point. But already here at this point, it is very important and it's very helpful to see. So for example, in a downtrend, the classic Dow theory, which is a technical analysis concept, which has been around for many decades, it has stood the test of time, so it's still valid today. It says that during a downtrend phase, the most important principle is that the market is making lower lows and lower highs. This means here, so when we look at the swing points, the swing lows, they are always going lower, lower, lower. We don't have any real swing low where the market is breaking this rule. Until here at this point, you can see after we make this strong uptrend impulsive wave, we see that the market is making a lower low. And here at this point, when we look at this area here, let me get rid of the red one. Then we can also see that the market is violating, okay, let me redraw them. So we have our swing low, we have a swing high here, then we have our first, we don't know it at this point that this is going to be a first higher swing low because we need to wait until price is also making a swing high. So at this point, here is where really the new trend is started, because when we break here at this point, the previous swing high, we are also breaking this swing high. So now we are making higher highs and higher lows. This is a very important point where the market is really transitioning from lower lows and lower highs to higher highs and higher lows. So this is a transition period where a new trend is initiated because the lows and the highs are shifting here the way they are forming on our charts. And then you can see here, as I mentioned, this uptrend here was initially quite strong, but then the strength dropped off, and we can see that already here. When we just look at how the lows are forming, this is a very interesting trend and a very interesting pattern here. So here you can see we have here where the highs are moving higher quite quickly. So the distance between the different swing highs is quite substantially, swing lows, sorry. But then here something is changing and the market is a little bit rounding off here. As we can see, the lows are not able to move higher as easily. The distance between the lows is becoming shorter, but at the same time here also the distance between the highs is much shorter as well, until here at this point the price is almost not able to push higher. This is then even what we can call a consolidation or maybe even a range market after this trend. Then we see here this last little exhaustion push and then the complete trend reversal. And any chart can really be explained with swing highs and lows. It might sound a little bit basic at the beginning, but you will see that this is one of the most important principles when we get into more the trade timing, how we find the best trades, because it really gives us a lot of information at one glance. So here again, I'm marking the swing highs and lows first, and then you can see here on the left hand side, we were starting with this downtrend. We make lower lows here at the bottom. The lows are quite far away from each other, which means that The sellers are always able to push price lower easily until here something is changing. The market is staying here for quite a while until the market even breaks out and is making now a higher low and a higher high. And you can see how then this sets off this new trending phase. We can take a look at the new market, and this will be always the case here. So we are starting here with a new trending period. The market is coming from a downtrend, and now here it is moving higher. We have our swing lows at the bottom. Just looking at the swing lows, we have it here, then here our last swing low, and then something here is breaking this trend structure. So the market is moving higher and higher and higher. The swing lows are always respected. Even here we can see, okay, although we come quite deep with this correction wave back into the previous swing low, we are not violating it. We are not breaking below this swing low, which is a signal that the sellers, they might be interested in the market, but the buyers still were able to step in at this previous point and continue then the wave to the upside. However, at this point here, it is very different. We have our swing low, then a last push to the upside, and then here we break our swing low. Once an uptrend market is breaking a previous swing low, it is already telling you that something here is not really agreeing with your trend direction. And then you can see once we fall past the previous swing low, the market is making a very strong move to the downside. We have here a wave to the upside, but we are not even coming close to this last swing high. So this is then where the new downtrend is really confirmed, and you can see afterwards the market has been going down for quite a long time. A big profit potential was then found here, and yeah, we will be able to explain many trending phases. Here's another example. You can see after this downtrend, the market found a little bit of issues here at this point, driving through that. So the market was pausing a little bit. The sellers were not really interested anymore or not strong enough. And then the market is slowly turning around. We are breaking here a previous swing high. We are making a new swing low. But this is also very interesting because here you can see the market is immediately running out of steam. So the buyers in this context are not really that interested. Although this seems to be like a little bullish trend or a little bit of a rally, it never found real support from the buying powers. And then immediately the price moved to the downside and is continuing the trend. And another very interesting thing that you will often see is that the market really cares about those little swing highs and swing lows, especially after a turning period. So here we were in this uptrend, short-term uptrend period. Then the market was selling off, changing the direction, and then we were coming back into this previous swing high. It is now tested and the market is really respecting it, and we will be able to identify those patterns later on to find very great trading entries. So there are usually 2 or 3 ways how we would enter such a trade. The first one would be here at a break of a previous swing low. So for example, in this uptrend, we would wait for a break of a previous swing low. Then on the here on the way up again, we are now short. We can look for short entries here during the duration of the trade, or even here, this is then again what we would call a pullback or a retest. So after the initiation of the breakout, the price comes back into the previous lows, and that's then also one thing that is a very effective pullback entry strategy that we will cover later as well. Here the same one happens again. The price is moving higher. We're breaking the previous swing low. Here's the first initiation, the first breakout signal to go short. And then once we come back, another pullback into such a market phase. And this is one thing that you will be able to find over and over again in all the pairs. And trending swing lows and swing highs are very important. It's one of the building blocks of all charting patterns and charting principles, as we will see in our later videos once again.